Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, your daily dose of all things cryptocurrency. Today, we're talking about whether you should invest in crypto now that it's gained greater acceptance among regulators and institutional investors. It's no secret that the crypto landscape has changed significantly over the past year and a half. Regulators like the Securities and Exchange Commission are finally starting to take notice, with spot Bitcoin and Ethereum exchange-traded funds getting the green light. Even the Labor Department has rescinded its 2022 guidance urging 401(k) fiduciaries to exercise extreme care when it comes to crypto investments. But what does this mean for you? Well, with Bitcoin now trading above $100,000 and U.S. lawmakers actively working on crypto regulations, it's definitely worth considering adding some exposure to your portfolio. However, as Tyrone Ross, founder of 401 Financial, says, we have a long way to go before you should be YOLOing your way into crypto. When financial advisors were asked if they'd recommend investing in Bitcoin or other cryptocurrencies a few years ago, many were hesitant due to the lack of regulation and high volatility. But Rick Edelman, founder of Edelman Financial Engines, thinks that's all changing. As diversification is key in portfolio management, I believe advisors should be cautious, but not abstinent, he notes. We've seen Bitcoin reach all-time highs and institutional investors getting involved for the first time. In fact, Edelman recommends a small amount of digital asset exposure. Even 1% can make a big difference. And when you consider the performance of a balanced 60% stocks, 40% bonds portfolio versus one with 1% invested in Bitcoin, it's clear that crypto has some serious upside potential. For example, if you reduce your equity portion to 59% and put 1% into Bitcoin, even if it becomes worthless, your average return would only drop to 6.9%. But if the price rises to $1 million, the return would jump to 7.4%. And with 5% exposure, the downside return would be 6.7%, while the upside return would be a whopping 9%. Now, I know what you're thinking: is it worth investing in crypto now? Edelman thinks so, and he recommends starting with Bitcoin as the largest digital asset and most popular choice for institutional investors. But before you take the plunge, there are some caveats. Scams are a big issue in this space, so make sure to educate yourself and do your due diligence. And if you're not comfortable with volatility, it's best to stick with players that have a solid track record and infrastructure in place. Trent Porter, a certified financial planner, agrees that crypto exposure should match an investor's personal risk tolerance and capacity. Keeping the allocation small is key. But even he admits that regulatory risk has eased, while market risk remains very real. So what's the takeaway? With crypto gaining greater acceptance and institutional investors on board, it may be time to consider adding some exposure to your portfolio. Just remember to do your research, understand the risks, and don't invest more than you can afford to lose. That's the Bitcoin Bulletin way. Stay informed, stay safe, and stay ahead of the game.